Good day, everyone. Ali is here from Sophie Financial Network. Today is October 18, 2023. Here is another daily analysis. Let's start with S&P 500 daily chart. We had downtick today, so let me go to daily chart here. So we had downtick today. Sell-off pressure was starting just at the beginning of the session, and it continues all the way down to this level, which is pretty important level if you ask me. So right now we are just sitting at a 43.14, which is kind of like pretty close to the gap just initiated last week. However, volume was not bad, 88 million for SPY, which is S&P 500 ETF. If you go to hourly chart, we can just understand what's happening to the market. So market just going all the way down to here to test this uh, demand area. So this is the gap happened last week when Hamas attacked Israel, and everyone just panicking about like a war. But market just formed the bottom here, nicely going back up and going to even higher highs. So right now we are just getting back to that demand area. Still, we are um, above this 42.71 to 42.84. I believe 4,300 is going to be kind of like a solid supporter. So we will see how it goes. But if market continues to the downside, I should say here, we should see buyers are going to come back. After hours today, we had Netflix, and Netflix earning along with Tesla earning came up, and we will get back to those ones, one positive, one negative after hours. So we will get to those ones. But all in all, I should say S&P 500 still above 4,300, still within this consolidation pattern here. However, this consolidation can have a downtick to here before getting back up to here. So again, just to buckle up, we will have lots of volatility, geopolitical tensions, earnings, everything is coming together. And right now we are just at this consolidation phase. Still, correction is not end when we get above 4,400, I should say 44.60, 44.70. That should be the bullish momentum continuation all the way to probable new all-time high. But if we get down to here to this area, I should say market needs to be careful, because if it fails to hold a 4,000 area, 4,100, that should be kind of like the resumption of the bear market, and that could be just a bear market rally within this bear trend. So we will see how it goes. I'm kind of like in that camp that after this October, probably starting November, we can see a bullish momentum resumption getting back to the market. So we'll see how it goes. Moving on to Nasdaq. Nasdaq at the oh, this is S&P. Let me go to Nasdaq here. So Nasdaq, same as S&P, we had ugly day today, just the market going all the way down to this gap here. So you see that these shadows in a smaller time frame, like this is 2 hours time frame. Look at that. So every single time market wants to tackle to the upside, but sellers to control here. Seems like there's a strong supply area here, somewhere around 15,000 to 15,100. So let's say in that area, if Nasdaq gets above this, I should say any pullback could be great buying opportunity. Even if gets above this, it can take out this pivotal point. But right now, market is in kind of like a seller's position right now. So everyone is getting back to the bear side. I believe tomorrow or Friday could be very, very volatile, just because some levels are getting hit and the market is just getting back to the demand area. And we should see if this demand is going to buy back the stock to the upside or just holding off for a pause. And after that pause, we will see continuation to the downside. Moving on to the US 30, which is Dow Jones. We got sell signal here with this breakout. So we are getting into this 34,000, 34,300. And fair enough, we had this sell signal. I believe still it can go down to here, but that small pullback could give us kind of like another buying opportunity. If we get above this time, so any pullback again could be a great buying opportunity all the way to here. So That's the plan that I'm seeing for the market right now. We don't see capitulation or kind of like a panic to the market. We see, yes, geopolitical tensions, one day positive, one day negative. But all in all, there is no panic or there is no absolute fear in the market. Market is just going sideways consolidation, one day up, one day down. So it's not going to be a big deal at all for the market. Moving on to individual names, starting with yield. Yield at a positive day. So yield is taking off to the roof right now. So all in all, yield established itself at about 5%, which is the highest yield since 2006. And that is scary just because when yield is up and it's reversing back down, this means recession is coming. And the probable recession, the sooner recession is now getting on the radar again. So everyone is talking about this and we will see how it goes. But yield is just flashing something to the investor's eye or trader's eye that something fishy is there and you should pay attention to that. Moving on to the TLT treasuries gap down. Again, buyers coming back. So treasuries gap down every day, but buyers coming back the whole entire session. This means buyers are going to be at the beginning. Sellers are going to be at the beginning, but buyers are going to come back the entire session and push the treasuries to the upside. After hours, it goes down again, $84. So 50 cents down. That's a lot. But still, treasury can hold up this area as well. A nominal low could be a possible scenario, but I should say in any time frame when I see this, it's pretty oversold in any time frame. And you should see a knee-jerk reaction to the upside one day or two, but still holding off for now this area. So lots of gaps down here from this area, but buyers again commit back again during the entire session. Gold, nice candle to the upside today, so pretty nice surge to 1960, coming back down right now at 1949. I should say gold is just hiking on the fear right now. And also yield is signaling for more dollar strength, but gold is going up. So what does it mean? This means that fear is there and gold is very, very smart. When gold is hiking up like this, so you see that this is a spark like this, we will see a more higher highs coming down the road. And I should say gold tells us something. Fear, panic, recession, or even pivot for the market is coming down the road. I don't know. So something is very, very interesting when you see the gold chart, because gold is not just because of the fear. Bond yield is up. It should put pressure on gold, but it doesn't. So gold is hiking back up. US crude had a positive day today. So it goes all the way up to this supply area, 89.90, and rejected sharply to the downside. As I said, this is very, very important level, folks. If you see crude is getting back down again for another higher low, don't be surprised around this area. So we should see some kind of like a stall out for crude for the next day or two. So I shouldn't be surprised. I wouldn't, to be honest, surprised if I see crude is getting back down to $84, $85. VIX spike up today, but rejection again came back, especially when we are getting to the last hour of the trading session. Consolidation, sellers took control here, buyers are going to control here. So very, very wide consolidation here between $16 to $20. Still can have possibility to go to 25 in a spike or something, because this consolidation tells me that a rip is coming down the road. But again, there is no absolute fear in the market. DXY is coming up today. So that's pretty interesting, because DXY is forming a bull flag here. We can go another probable scenario is going to be touching this top, or even just a stretch a bit for a nice divergence here between these two top and then coming down. But DXY, I should say, is telling me that we are at the end of the dollar strength, and we should see a stall out is coming down the road. Moving on to magma indicator, this one is forming a nice bullish consolidation, but this bullish consolidation, we can just a back test here, this top, and then coming back up. So don't be surprised if you see a downtick for next day or two. This week we will have option expiry for months of October as well. So pretty volatile week, I should say. Apple, just $1.31 down. Not a bad price action, still hold up above SMA 20. Amazon, $3.34 down. Amazon is just reversing to the backside, and we should see some kind of like spike to, or even advance to dollar 119 to 120. So we'll see how it goes. Meta, $7 down today, and still holding up this consolidation phase, but Meta can go down again, back test 300 area. Microsoft, $1.95 down. So this is a bullish consolidation, but this bullish consolidation again can go down here to back test this and then coming back up. So we can see zigzags to the up and down. So don't be surprised if you see something like that, especially in these volatile weeks. Google, $1.76 down. Not a bad price action. Still hold up this pattern for top. Netflix, sharp move to the downside, but after hours, Netflix 10% to the upside. So Netflix should see a gap up tomorrow, and we'll see how it goes. Tesla, ugly today, even after hours, it goes lower. And probable scenario is going to be we are going to take out this pivot. If we take out this pivot, we can go all the way down to here to sub 200 level, which is going to be a fantastic area for buyers because we are getting into this into this demand area. So we'll see how it goes with Tesla. Moving on to semiconductors, which are weak for the second consecutive days. Actually, semiconductors are weak since beginning of this week. Doji bar here as a match is still holding up this area, but it can go lower. SOX, $8.65 down. TSM, $1.40 down. AMD, $2.97 down. NVIDIA, which was leader to the downside, this one is forming head and shoulder on the top and $17.42 down. NVIDIA, $421. Texas Instrument, $2.44 up, down. And Lam Research, $7.71 down. All in all, semiconductors are weak. And when semi is wrong, semi is weak, there is something wrong with the market. Moving on to financials after yesterday, good price action, financials stalled out today. So that's why I put pressure on Dow Jones and 58 cents for XLF, KBE, which is the large cap bank ETF, 95 cents down, KRE, $1.15 down, and JP Morgan, $1.62 down. So these ones are telling me that still we should see a volatility, but still hold up this pivotal point. So as long as they're above this October low, they're fine. But as you see here, JP Morgan, we see some kind of like a weakness. Whenever we see a pivot take out and then coming back down sharply, we're just getting below pivot. So this is kind of like a weakness price action. And we should see this area hold up for now because that could trigger a nice reverse QM pattern for the upside. So I'm just looking for, to be honest, 142 to 144 as a kind of like a support, strong support here. If this one take out, I should say JP Morgan can go all the way down to this gap. I know there is going to be a support here, but this is going to be the earned result for JP Morgan. So just be careful on this, 140 to 142. This should come back up again. Goldman Sachs, $7.40 down. Look at the Goldman. So this is pretty weak chart. This is a bear flag, and this is a supply area, bear flag, and then getting back down to here. I should say this one can go all the way down to here or to here even. So 280, 290, that could be a possible scenario for Goldman Sachs. Bank of America down today, 31 cents, and Wells Fargo, not a bad price action. So still hold up this bullish momentum. So you see there is divergence, absolute divergence in Wells Fargo and the banking sector. GoldMiners, after nice surge to the upside, today just ended up negative. This is a warning sign for gold because gold miners are not following it again. So I want to see gold miners follow up gold or could be a leader. Right now, gold miners gapped up today, getting above this pivot, but coming down. So probably just going to be a back test to this trend line and then taking off to the roof again. So we will see how it goes if this is the scenario. I think that's going to be the case, but not a good price action when you see gold miners are negative when gold is positive. GDXJ, 4 cents down today, so gapped up, getting above this trend line, coming back down. So this is a technical reaction. AEM 4 cents down. Newmont just hit this trend line today again, 55 cents down. Franco-Nevada 99 cents down today. So, and gold barrick 12 cents up today. So still gold barrick hold up pretty well above this trend line. This is a multi-months bottom there, but I should say we should see some kind of like a consolidation. That would be a great, healthy, corrective move within time because we had a nice surge. For the last 2 weeks, we had a nice surge to the upside. XLE, which is spider of energy, a nice move to the upside, getting back to this pivotal point. XOP dollar 14 cents up, OH dollar 10 cents down, Exxon dollar 56 cents up. So Exxon can go another boost to the upside here, 114 to 115, but I'm not sure if it can more than that. Chevron dollar 33 cents up. Not a bad price action, still pretty choppy consolidation. Chevron doesn't go anywhere since, I should say, beginning of this year. Chevron, when it stalled out from here, from 187, it doesn't go anywhere since beginning of the summertime. So we'll see how it goes tomorrow again. More earnings are coming. Just buckle up. Geopolitical tension, and so on Friday we'll have option expiry 4 months of October. So be careful, folks. Have a fantastic evening. See you on the chart. Bye bye.